Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is a special day. It is August 5th, 2016. It is 8:10 a.m. Eastern Time, and it is the best day of the month. It is non-farm payroll, U.S. jobs report to determine the outcome of how the U.S. economy has been progressing. So let us see. Let's go over the disclaimer before anything. Disclaimer: future stocks and spot currency trading have large potential rewards but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This presentation or website is neither a solicitation or an offer to buy, sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance indicators or methodology are not necessarily indicative of future results. Being that said and done, for those of you here for the first time, welcome, and for those of you that are back, welcome back. It is a special day. Let's see what numbers do they expect. Our only average earnings 287. Was this? Let's see. Hold on. Let's see. We're talking previous and forecast. All right. So this was a previous. They're expecting 180,000 jobs or better. Unemployment rate should stay around the same. Average hourly earnings, I don't think will do anything different. We also have Canadian unemployment rate coming out and trade balance. So the US CAD will be in play. Should be an interesting morning. Let's go to the charts. So I mapped out the euro, and this one right now at this particular moment, rallied at the open. Now, this is an interesting chart because of the levels that I have. These are very significant levels. This is a daily level, but it's a mid-range level. So I'm thinking that what they're going to do, because to me, it just looks a little on the strange side right now. They're trading in the middle right now. Now there is no, they've already broken through the 50, the 100 moving average, and the 200, and they went to this level. Now they haven't really been able to, bounce above, go to it directly. So I think as we get closer to this, they're going to either make a move up here, and when they do, they'll spike right through it and come down, or at the open, they'll come down and then make the move up. Now, we all like gold, and gold is our catalyst, and gold right now is indicating down. Now that means, that means a weak dollar. And if that means a weak dollar, then this is really just going to kill everything. Now, gold has been a very good catalyst right before non-farm payroll. And I like this trade. And I'll tell you why, I'm entering this trade. The reason why is because they've already made an attempt to go up and failed. They came down, did nothing to go back up, and so right now, before anything, let us add the volume and price identifier before we go back to the currencies. Gold is usually the catalyst that gives up non-farm payroll. The banks, for some reason or another, make the mistake to move gold prior to the announcement. So right now, we're going to see if that is the case. The past few months, they've been doing that. So if they weaken gold, that means that we're going to have a strong dollar. Now, gold is at an all-time, again, reached its all-time high. It already went to 1370 an ounce. Actually, 1374 was the high. Right now, it's trading at 1361. So it's come down quite a bit, but everything is indicating right now. Let's take a look at this. Let's open this up. So this is the candle pattern that we look for. This shows an imbalance between the body of the candle and the points of control, and we also see it here. This is a retest of the trend stop. So everything is going down. They've already traded below the 50. They've already traded below the trend dots, this was a good trade to the downside. It broke all the levels, and now this one, if this one comes right back down here to 1366, then we're good. Then they've pretty much given it away. But more importantly is that you're about to see something very important. You have here volume divergence. As this is going up, this was getting ready to come down. So you cannot have from this point price action going up and volume coming down. Now here is the tricky part, because this is number 2. Now as you can see, this was a bullish candle, and it settled the bullish candle with a bearish outcome, but it settled still with bullish volume. So let's take a look at that. It's important to understand this because these guys are really, really strange. See, you had 702 on the buy, 655 on the sell. Here, 508 on the buy, 513 on the sell. This one had balanced out perfectly, 305 on the buy, 305 on the sell. This one had 189 on the buy, 279 on the sell, difference of 90. And this one, no, this one had a bullish outcome. But regardless, you know, this is telling us right here that they pretty much did a lot of high frequency trading, and now it's on the downside. So I actually like gold down because they've been setting this up to go down. Now, if I'm right, they're going to take this thing way below 1365.70. And if they break below 1365.70, which is really the low of the day, then at that point, we should be able to calculate that they're going to strengthen the dollar. If they strengthen the dollar, we are on very, very, very good terms. So at this point, everything's indicating that. Now, if that is the case, you know, if we are seeing gold weaken, then that means the US dollar is going to strengthen. That's just the norm. So if that is the case, then when we look at the euro dollar, and let's go to the euro dollar real quickly because we have a few minutes left. Be a little patient. As they say, patience is a virtue. In this case, we mean it. Let's give it a minute. We're almost there. Now, if you haven't had your coffee, have some. Have a lot of it. Because right now, like I said, it's going to get interesting. It's going to get interesting. So gold is our catalyst for NFP. And even for the rate announcement, for the U.S. Fed rate announcement, I actually traded gold when it was, you know, when they hit 1320, and I rode that thing all the way up to 1370. So that's why I'm telling you that it is in play. Give it a second. Oh, I know what I did. Son of a gun. I've got 150 days of data on this thing. It's really going to take a minute or so. So bear with. Come on, come on, come on, come on. Almost there, guys. Almost. I have to reduce the data series. All right, here we go. Let's go, 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 go. Come on, come on, come on. Gold is just going down, down, down. Oh, what a beautiful thing. Come on. Come on. Almost there, guys. Almost there, I promise. This is on me. don't worry, I have to reduce the amount of days in data series, so we're going to take a look at this real quickly. We got 10 minutes left, but it should come out right now. So just bear with. Come on. All right, there it is. Oh, beautiful. Okay, so here we have the same thing. We do have volume divergence going down, and this is a second attempt. So this is on a 15-minute. So this is a good indication for us that there is a lie to the upside. And they initiated this here. And look at that. It's been coming down ever since. Now, here they hit the top, they put a pivot, and it's on the way down. Now, like I said, this is important because it tells us direction. So, gold was coming down, and so we're anticipating the same thing. I'm anticipating the euro to crash. That means that there's going to be a strong jobs number today. So let me remove these indicators now because they're going to take up quite a bit of room. And yeah, let's do that. And let me change the data series because I've got too many days and I don't need that many. I really just need past 30 days. Okay, so now we know that they've been trading here. They haven't hit the high, but everything is indicative based on what gold's doing that they're going down. And if they're going down right before NFP, then this is the one. This is the level that they didn't hit. So I'm assuming that what they're going to do right before the announcement is that they're going to come up and then come down. Now, the US yen is usually a better bet because they're more directional. And in this case, they are directional. Everything is indicating up, up, up. So this one doesn't play around as much as the other one, as the euro does. But I like this one too. And this one is even though it's trading right off of this level, they're really, really indicating that they're going to move up. Now here's the issue. Almost all of them usually like to spike before they move. So right before it, I'd like to say 5 minutes before it is going to be one of those where we have to really make a decision. Do we see, this one's not too bad. This one, assume they would hit 131.94 before coming down. They're all going to spike. There's nothing we can do about it. I'd like to say it's a 20 pip stop in that regard, but it may not be. So let's take a look at gold again. Like I said, gold is our catalyst, and right now gold is looking good. Now, everything is indicative that gold's going to take a hit to the downside, and if that's the case, then the dollar gets strong. So they must know something that we don't, and that's usually the case. The banks are, have divisions of economists, so they've been gathering information over the past week to get ready for this day. They're ready to manipulate this trade. So I like gold down. I really don't like it up. I like it down. And I think that right before anything, they're going to give us that signal and it's going to go. And when it goes, it's going to go nice. So this is actually a cleaner trade because they're even trading below this trend stop right here, which is also a midpoint level. And so long as they stay below it, we're good. So right now, it's just a matter of just waiting, waiting, and waiting. They'll usually pull the trigger, 3 minutes beforehand. I don't like the fact that they bounced off the 200. That's not a good indication for me right now because it's right smack in the middle. So, but everything is indicating down here. And so at this point, I'm going to stick to that. And this one is also indicating that they're not going to break above this level. We're trading probabilities, you know. We're looking for indications of why they would not. And in this case, everything indicates that they're going to crash the euro. So if you take this trade, no buy, hold, sell trade recommendations, I would tell you put a stop loss above the pivot, 111.61. Your risk is minimal, 6 pips, 7 pips. You can even go as far as 10 pips up here. I hate to say it, but actually put it right above 1166. I think they're going to spike up before they spike down. That would be my assumption. Same with the pound. See, the pound, I just don't see it going up. They've done everything possible to hold it down, and I think that right now everything is indicating that they're just going to crash this bad boy. The one that looks to go along is the US yen. And again, only because they're getting ready to crash gold. And so this one, based on how they've been trading, normally I would not be going long on this one quite yet, but I think they're going to come down and then spike up. So I actually like this one to the upside. And again, gold is our catalyst. See, it's still to the downside. So we'll see right now. Gold will either give us the trigger or not. Normally, unless you're really, really sure of the trade, don't trade it. I always tell people, in this case, the probability looks very strong that they're using gold as a catalyst and they're going to dump gold. And if they dump gold, we should see a $20, $30 move to the downside on gold, and that will trigger the euro and the pound as well. So far, this one's holding. If they break right below the announcement, 1366 even, which I think they will, then at that point, that's the giveaway. And then we know that for sure the euro should be coming down as well as the pound dollar. Even though it looks like they're going to rally it up, I tell you, there's deception in the midst, and gold is usually the catalyst. And right now, the yen is at break even, but look at the aggressiveness, how they've been trading above the trend dots. And granted, they are challenging here, and this is a mean reversion trade, but this is going to be one hell of a reversion to the upside. 2 minutes to go, and you can see gold just holding right now. So let's see if we are correct this time. We've the last 3 NFPs, we have had great success. So this would be the moment to determine if our success continues. But you should have a tight stop loss at this point. Like I said, they didn't break above this level. This is a mid-range level. I had mapped this one out, and it looks good to me to the downside. I just think that they'll initiate to go up before they come down, or they may just go. I mean, that's the thing about the euro, that you never know how they're going to play it. You never know. 1 minute left before the announcement. Gold is still steady to the downside. They started moving the euro. Let's see if it holds. I'm sure everyone is spreading this thing left and right. Gold is still to the downside. Go, baby, go. Come on. Oh, there it is. What a beautiful thing. You gotta love it. You gotta love it. Look at that. The US yen went long. The pound dollar went short. And look at gold, baby. Woo-hoo-hoo-hoo. Can I have a amen and hallelujah, brother? Because that's what we got right here. Tell me that gold is not, tell me that Phoenix trading strategies did not knock this out the park today. So now's the important part. Now is actually the part where we determine, do we stay or do we go? Well, they're all positive right now, all the trades. So at this point, realistically, it is a matter of determining. See, I don't like when they play this nonsense with gold, but I know that they're going to continue to crash. That's all a bunch of, ridiculous nonsense on them. They've, normally on an announcement like this, they crash at least a good $20, $30. So we're going to let gold play its course. This is right now a $10 move. So the euro, as for the euro, it came, we got in at 11.54. It's trading at 11.07. So that's 50 pips, 45 pips right there, 43. Let's wait and see if it comes down a little further. I usually like 10-minute more than I do the 15 at this point. And so if it comes down to 1100 and breaks below that, then we'll take everything. And if not, then, well, we won't, of course. We'll just basically exit. But what were the jobs report? They had to come in. Oh, yeah, they came in high as the fly. Let's see. Let us see. Now, you and I all know that no one out there does what Phoenix Trading Strategies does for you guys. What we do goes above and beyond the norm. I mean, we literally put you on the edge. It's not an adrenaline rush, but it is. It's the assurance that we're going to hit the trade and we're going to hit it right on the money. All right, so there are 255,000 jobs against the 180, which is great. 4.9% unemployment rate, declined slightly, rose actually. Average earnings were better than expected, so it's all good. It's all good. And the yen continues to go, I don't like the fact that it didn't move as much this time. It should have really just gone through the floor, gone through the roof. The pound dollar did a very nice trade to the downside. It's 60 pips in it right now. And again, they used the 200 moving average as a mean before coming down. We knew that. So, but again, if we would not have used gold as a catalyst, we would have never seen this trade coming. So thank you, thank you, thank you, thank you very much. You beautiful metal, you shiny little thing. Did you have your coffee? If you haven't had your coffee, have some now. You need it. Believe me, you've got to stay awake for this. We're not going anywhere right now. This thing has to move even further. Now that euro is in dangerous ground right now. Normally I would expect these, I'd expect these moves to at least move 80 pips, but they're taking their sweet time right now. The euro should have broken below 1100 right now, and they have a big, big fear of breaking that level, even though I don't, but like I said, this was going to be a very, very interesting day. Now the pound dollar is just kicking butt, moving along very nicely. I mean, between everything right now, we're up 250 pips practically between everything. Now gold's kicking butt. Gold is the one that really just set this thing off. But like I said, this thing should come down at least $20. I'm expecting a $30 move on this sucker, to be quite honest with you, unless they hold it and they don't go below 1352. But I wouldn't be surprised if they break the floor on this one. The US yen, I'm surprised that it didn't move any higher. It's been taking its time. And again, look how they set this up. They went long. They were right off the trend stop here on the 10-minute, on the 15-minute, no. And this is the reason why I use a much more professional platform. Look, I like MT4, don't get me wrong. MT4 is a great platform, but it has limitations because you can't use other minutes. Now, I am going to be converting the indicators to MT4, but only these. I cannot use the price identifier or the volume indicator. It's just not, they just won't work on MT4. So, but at least you'll have the signals there, which is reasonable, I guess. So right now all the trades look solid, very nice. Really there's nothing much to do at this point except just wait for them to give up more and more and more and more and more. So if you don't have a smile on your face for waking up early today and joining us, there's something wrong with you. Now, next week we're going to do a special offer, a summer sale for the training and the software. So we will let you know. You will get an email, and then you can decide for yourself. I mean, we've proven time and time again that we are using cutting edge information to basically break the banks. So at this point, I think you want to be with the winning team, the one that gets you to that next level. All right, let's go. Yeah, see here, for instance, when you look at this, they set it off here. You had volume divergence to the upside. It continued. This was really nice and systematic right here. This is what gave them away. And then, of course, everything was bullish here, and they just popped. So at this point, and you got to look at gold. I mean, gold is just a wonderful, it's a beauty. Let me remove these indicators. This gold is just annihilating everyone and anything in its path. Look at that. What a gift. It's the gift that keeps on giving. So let's look at that euro. Oh my goodness, they broke below 1100. Can I get an amen? You can sing. Right now, imagine yourself, the sky is not falling. The sun is out. The birds are singing. The angels are lining up, and they're just singing this beautiful hallelujah, hallelujah, hallelujah. See, we get emotional when we win. It's a good feeling to know that you win. No one has that feeling. But here at Phoenix Trading Strategies, we give you that feeling to say, yeah, we won. We got them. So I want you to have that. I want you to say that. I want you to mean it. And today we're going to mean it. Let's take a look at that US. This is the pound dollar. Beautiful trade. Like I said, right off the 200 moving average. It was just a gift. Just a gift. The US yen. I mean, see, this one should have moved even more, and it hasn't, which is what's bothering me. But gold is still the trigger, and gold is still driving everything down right now. So this thing, if it breaks below 1350, oh my goodness. I mean, imagine a 100 pip move on the euro because of it. Because this thing's just on a crash course to annihilate and beat someone to death. I mean, it is just bad. Whoever was on the wrong side of this trade is shedding tears like if there was no other. Now, I don't believe the jobs report, to be quite honest with you, because most of those jobs are all part-time jobs. But see, trading is a part-time job for us as well, except that we do it right. So in one day, we can actually make half the month or the whole month. I traded the UK rate announcement, and I shorted the pound dollar right before, 10 minutes before the announcement, and I had a clear signal on that thing. Made 163 pips. And I put 5 standard lots on that. Do you know the gratification of how I felt after I beat them? There's just no other feeling. I mean, guys, you really, really got to wrap your head around this, Really think about this. The indicators that we use, this is an algorithm that basically outlines how they're using, if it's a resistance level that they're setting up, or if it's a support level. The power dots are excellent because they announce when there is high frequency in play. Now, it didn't announce here, but if we go to the higher time frames, and I always love to look at the 180. The 180 is usually a bomb. See, the 180 had power dots indicating short. Now, I didn't show you this because I had looked at it earlier, so I want to show it to you now. We had a clear signal that they were going to kill gold, and they did. And so at this point, everything is just beautiful on this trade. The 120 may or may not show it. Yeah, the 120 showed it perfectly as well that they were setting up a level to just annihilate gold for non-farm payroll. And so, you know, this is important to understand that this is information that you don't have and you need desperately to trade. See, if you would have had this information, you would not be trading with fear because you would remove fear and doubt from your decision process. You'd be trading with all the confidence in the world. And so even the 5-minute gave it away, but we were looking at the 15 and the 10-minute. But the 5-minute had it set up here. You had power dots here telling you that they were going to dump this thing. Now the 5-minute is when these power dots come out, and these gold dots, I call them power dots, and they're very powerful because of the information they display. What is the information they display? The information that is displayed means that they're doing high-frequency trading to balance out their positions because they're going to move the market, and it's not going to be in the direction of the power dots, but away from them. And that's exactly what they've done. So look at this trade. We're up on this one $15, a $15 move on gold. And I'm telling you, it still has the possibility to break again below 1350. This ain't over. You know, normally gold will move at least $20 to $30, at least. Now they're holding it here. So at this point, I'm getting a little concerned that they're not moving, and if they don't break below 1352 shortly, I may actually exit. Now, the US yen hasn't really done more for us. You know, it's already starting to come back. So at this point, I would actually take what's on the table on this one and just not even worry about it. I'm sure that it's going to continue, but I don't like these retracements because they can always come back to haunt you, and it's better not to let them take advantage of that. But even this one on the 5-minute gave them away. Again, like I said, you know, we were looking at a 15 and a 10-minute, and I didn't want to go into a small time frame because I wanted to see what gold was going to do. But gold is still just kicking butt. I mean, it's right there. If it goes below 1352, then I know that we're safe. If not, then it's time to exit and take what's on the table. But like I said, I don't like the fact that the US yen is starting to reverse, so I'd rather just take what's on the table. Same with the euro dollar. You know, it's at a very strong support level. You know, it's obvious that they're not going to move it any down any further. And 55 pips is not a bad trade, 54 pips. So at this point, we can take what's on the table and move on. Same with the British pound. You know, at one point we were up 700 pips on this thing. You know, so we take, we take 60 pips out of them, or in this case 58. I don't mind. Believe me, they mind, but I don't. And so at this point, it's just a matter of just being smart and moving on. And so, you know, taking almost 1,400 out of gold, which is a $14 move, or $13 in this case, because they're ready to come back up, is just as good. Now, because of the volatility in this thing, I would tell you that this thing is probably going to come right back up because they've done that before. And so, since we're already up in the game right now, I'd like to tell you that this trade looks like they may come right back up here at 1362, but at this point, once you've won, I have a very strong belief, keep what you got. See, the euro looks a little bit better in this regard because we know exactly what it's doing here. And here, I would actually look to see what the price identifier and volume are telling me now. This is where this information becomes very key. Now, granted, we've already beat them at their own game. So to do anything else at this point would be reckless. It would. Once you've beaten them, once you've beaten the system, don't get caught in the emotion. I need another trade. No. Do not do that. Take your money and run, you know. Why are the dots saying long around midnight? Oh, I see what you said. We'll take a look at that. On which pair was that? If you can elaborate, Michael, and we'll go back to it. Okay. Now here, this is a clear signal that they're going to that they're going to reverse and go up. And since they did come up and this thing closed right at it, I'm actually, I can evaluate risk, and I can say my risk is 10 pips. Well, I like this trade to the upside, and I can risk 10 pips. So if my risk is at this level right here at 110.89 and I got in at 111, that's not a bad trade. Now if it goes my way, great. I've already won. So I'm going in with information S&P. You sure? So at this point I'm going in knowing that my risk is 10 pips, $100. I've already beat them. So at this point I'm expecting this to come up here to 111.15, possibly 111.23. So I'm not going for a big trade. Now, this could be a mean reversion trade where they come right back up, right back up. So if they do, I'm not going in on all three trades. I'm actually just going in on one trade. I'd rather, like I said, I like to keep what I have. And in this case, let them basically battle it out. I've already beat them out of 4 trades. They can lick their wounds. Now, if the trade plays out for me, then great. And if not, then I'm only risking 10 pips. And I can live with a 10 pip stop loss because it falls at one of my levels. So they went from level to level. Okay, I want you to understand that these levels that we map out are power dot levels in higher time frames. But again, we're expecting them to do something, and if they're not playing by our rules, then we're not going to give up more than just that. Now, if we know that this trade's going to kick, then at this point, we can actually buy, we can add another lot to it and say, all right, if you're going to go, then I'm going to go with you. Now, we have volume divergence here. I want you to look at this. On the 5-minute right now, everything is indicating they're going to take this puppy up. So I'm interested at this point. This information allows me to determine that I can actually risk another contract and go long, but I want to see first how they're going to play. Everything is indicative that that they can retrace right back up. But this is my stop loss, 110.89, and I'm not going to break my rules for anyone. So if it doesn't go, it doesn't go. I don't mind taking a loss, but it has to be one with measured risk, limited risk. Know your risk before you enter a trade. Now at this point, since they're not going any lower, and it seems like they're not, I would actually take another trade to the upside. And so now I'm long two lots. Now again, my risk is still 110.89. I won't risk more than that. If they hit that level, then I'll just close my trade. And I won't think twice about it any further. But so far, we're identifying that there is some volume divergence, so that means that they could play what's called a mean reversion trade, where they come right back to the mean. And in this case, they'd have to come back to 11.43, 11.42. So let's be a little patient. Let's give them some time to work it out, to think about it. And if they don't come down, then they don't come down. If they come down, then we take a small loss and we move on. No harm, no foul, as they say. It's trading at 110.92 right now, 110.91. Ooh, bounce right back up. 110.93, 110.92. Now there is negative volume in this thing. I do want you to understand that. See, they're hitting our level. So at this point, it's actually time to just close and move on. If it doesn't bounce up from here, then I will, see, now it's never give up more than what you are willing to give, because that puts you in a losing position, and that means that, let's say you miss this trade and you say, oh, they're going to go long, and they don't go long. Then on this trade you lost. It looked like they were going to give it. They didn't, and so it is what it is. I'm not going to cry about it. They came right back to support. Maybe they'll break below it. Maybe they won't, but they didn't play the trade that I wanted them to play. So at this point, I'm not too concerned about it. And this did have negative volume. Look at the amount of volume. They were playing 188 million on the buy to 24 million on the sell, difference of 35 negative. And they did come down. Now here we have 27 million on the buy, 28 on the sell, 31 on the sell, so it has negative volume. And again, now they're trading below this level, so I would not be looking for a long, I'd be looking for a short. However, they haven't broken this level. And so I'm actually hesitant about jumping in on this trade for them to continue to go short, because they would have done it by now. And they didn't do it previously. So maybe this isn't the trade for me. And since I've already had a slightly bad experience, I will normally just say, we'll scratch this one, we'll move on. And I'll literally just move on. I won't think twice about it. Even though I have a good feeling that this thing's going to run, because they didn't pull it off here, but everything's indicative that they're going to come right back up. Gold, and we'll take a look at gold right now. Let's go to gold real quickly. Give it a minute. Gold is telling us long at this point, but they're using the trend dots as a resistance level. So if it doesn't break above, then it's going to come right back down. And it was very disappointing, because I really was expecting them to move $20 to $30, and they didn't do that. Normally they do. So for all intents and purposes, we can see this come right back up as well. This is an indication that, they could weaken the dollar and come right back up. But again, it's not clear at this point. The volume and volatility are dying down, and we're only half. We're barely into this about an hour right now since we initiated. So, but we're still up in the game. Now it's just a matter of taking our time and moving on and seeing if we find something that makes sense. So let's go look for another opportunity. Let's take a look at the US Swissy. See, look at this thing, went right through the roof. What a beautiful trade. Euro yen. Ooh, this one was a vicious one. I mean, they whipped everyone to death on this one. Euro New Zealand. See, I like the Euro New Zealand to go back up. It came up, came down. This one looks good to me, to the upside. It looks like it's got some room to run. But that gold trade is the one that's telling me, not yet. Now my risk here is significant, because we're talking about 20 pips. I don't know if I want to risk 20 pips. I'm accustomed to just risking 10 pips. I don't want to go against my own rules. It's trading at 54.63. 54.50 would be my stop loss. So it'd be 15 pips. I guess I can live with that, but I may want to wait right now. It doesn't look too promising. The Euro Swissy didn't do much. And see, this is telling us that the Swiss franc is going to get stronger against the euro, but it's not, not a trade that I would normally take. The euro pound, power dots here, they, first they came short, and now of course they're indicating long, but we're late, we missed it. Pound New Zealand. New Zealand got stronger against the British pound. Wow. Nice trade. Nice trade. Pound Aussie, the same thing. See, the Pound Aussie was a beautiful trade. They used the trend stop to come down. And sometimes you'll see, there was a question, why is it showing to go long instead of short? It is. However, if they don't break the trend stop, if they use it as a resistance level, then they come right back down and they break the level. So sometimes this is not a real support level. It's more of a midpoint level. And so we look at it from that perspective. Let's continue. Pound Swissy, we're late. Pound Yen, we're late. New Zealand CAD, we're very late. New Zealand dollar, we're late. New Zealand Yen, we're late. Aussie Yen, oh, now this is interesting. We just might be on time. This one hasn't kicked, and risk is limited. I like this trade, but I don't like the aggressiveness yet, so I'm going to wait for them to trade below this. At this point, I wouldn't jump on it quite yet. I'm looking more for a short than I am for a long. Now, the fact that it didn't break above is a good sign, so let's wait and see what it does within these next 5 minutes. Like I said, I'm looking more for a short. And if it doesn't give, it doesn't give. Everything looks like they're going to break to the upside. So, but at this point, I'd have to see them break above, and they're not breaking above. So it looks good to the downside, but we'll come back to it, Aussie yen. But look, gold's coming right back down. See how they use the trend dots as a resistance level. So now, based on that, I would actually go short gold again. You know, I know what my risk is here, and my risk is limited. So at this point, what's my risk? My risk is right here, 1356. Why? Because this is where the trend dot is. So if they do come up, they have to break above this, and if not, then they got to come right back down. So I just might recover, you know, the $100 that I lost on that last trade on the euro, which I would actually be looking for a $2 move here, not just a dollar move, but we'll see. You know, we got to give it time to play. Like I said, usually gold moves at least $20 to $30 during non-farm payroll. IGC gold long dots near midnight. Ah, yes, here. Right. What this is announcing here is it's announcing basically that there's a lot of high frequency trading, that they're balancing out their orders. Doesn't necessarily mean long. It just means pay attention to me. So what I teach you is to analyze how they're trading and how they're using the trend stop and this level against these moving averages. Now these pivots here, these magenta dots are very important because they're basically determining resistance levels more here than here. And more importantly is that depending on how they're trading, this is where the volume indicator is very crucial, because the volume indicator, let's add this real quickly. We'll let gold play out a little bit. Actually, I'll just add the volume right now. Let's see. Let's see. Okay, so here, for instance, let's take a look at this. Let's open this up. Come back here. Right. So this is what you're looking at. So everything here from this point is indicating short. Now they never really went above this level here, so they were always maintaining. And then here you had volume divergence to the downside. So it's not easy to identify. It's something that I teach you to learn. But once you see it, then at that point you start to really appreciate the software, because then it indicates to you that they're really getting ready to go down. So this was here, and they were trading right below the trend dots. These dots, which are trading right where the candles are. So there was volume divergence twice before they made that move. Here, there was volume divergence. You had it 3 times. So in this case, and you had it here. So every time they were really setting up to go short, not long. And so when you look at it, that's when it starts to make sense. Without the volume indicator, you wouldn't be able to determine that. So that's why the volume indicator is a very key component of our system. Just like right here, you know, everything was indicative that they would look like they were going to go long, except that they held it here and now. And this one ended up closing below this one. You see the dashes? And so now, of course, we're on our way right back down. But there was no, this is volume divergence to the downside here on this one, from this point to here. Why? Because the dashes are starting to settle closer to the 50% line. This one actually settled in the negative. This is negative, and this is in the negative. And again, I'm not expecting a big move on gold, to be quite honest with you. If it gives me $2, I may take that and move on. I don't really think I want to, press it any further because I don't know if they're actually going to come down further. It's just one of those things that they did a $15 move and then they went right back up. Normally, they just collapse, and when they collapse, it's over. So in this case, I'm actually just waiting. And if they don't come down any further from here, then I'll just basically close the trade and move on. I'm looking for $2. That's it. If it gives me more, then great. If not, then I'll close the trade and be done with it. But at least I recovered the 100 that I lost on the euro. Yeah, no, you got to understand that, what we're giving you is really, really cutting edge information that normally you would not have out there. It makes a difference when you trade, when you know what type of information you're looking for. See, look, now I'm up $3 on this trade. Let's see if they go for 4. Now I'm getting greedy, which I shouldn't, but I said 1350 is a magic number for them, and if they're not going to break below it, then I'd rather just take what's on the table and move on. But at this point, I'm profitable all the way on this trade. I've made up that minor loss that I had, and so now it's just really just a matter of just waiting and giving them the opportunity to prove me right. And if they prove me right, then I get more. And if not, then basically I just take what's on the table and move on. Sometimes it's better just to take what's on the table and move on. I was looking for a $2 move. I got $2 and $2.10 on it, and that's it. And I can live with that. See how it came right back up? So yeah, trading is meant to be, is complicated. We simplify it for you so that you know exactly the information that you're looking for so that you don't get caught. See here, for instance, right before this came down, we had volume divergence, and we looked at that, but we were looking at it on the higher time frame. Everything was just indicating down, and it came down like a stone. Is it easy to predict what non-farm payroll is going to do? Not necessarily. No, it's not. The way we trade, it's predictable. The probabilities are very, very favorable for us because of the information that we're looking for. We're giving you information that only institutional traders look at. So the way that we train you is that we train you to look at the trade from an institutional perspective, not from a retail perspective, because now you're looking at more information that you didn't have access to before. Before, you were just looking at moving averages and price action. And believe me, the only reason why I use these moving averages, the 100, the 50, and the 200, is primarily because they use them as a moving mean. And there are many studies on mean reversion. And so most economists have written their PhDs, their thesis, on using these 3 moving averages. They always reference them. So if they reference them, then the idiots that program for the banks are going to use them as well. And that's exactly what they've done. And so I just took their information and I'm using it against them. But I know how they use it. And that's what I teach you. I teach you how they use them. And that's the difference. But see, it didn't go lower, so assumption is that they're going to come back up. Let's take a look at that euro now, see what that euro did. Dow rallied, S&P rallied, NASDAQ rallied, Russell rallied, the bonds rallied. God, it's all confused. Just give it a minute. And usually after a non-farm payroll, if I don't see that I find anything else, I'll usually just walk away. At this point, we gave them we gave them a home run. We hit a home run, and they're licking their wounds right now. And they're saying, "What in the world did they do, and how did they find out what we were doing?" Well, they're not that smart, I can assure you. They look smart, but they're not that smart. I know most of the tricks in the book, and that's what I teach you to look at and to identify. So let's whoa. Let's go back. I eliminated one too many. All right, let's take a look at crude. Oh, this one's deceptive. I imagine crude coming down and crashing. Let me change something on this indicators. It always goes gray, and I always change it to gold. For my eyes. See, I didn't like crude going long. I expected crude to crash, and of course we're late. And I hate being late on a trade like this, but I won't take it. I just won't take it. Let's go to the 15-minute on this. But see, here there was a clear indication of long right before, way before the announcement. They were ready to go long. And they used the 100 moving average as well. So when you have power dots with a moving average like this and everything is indicative go long, they're going to go long. Don't question it. They're just going to do it. Let's take a look at the Dow. See the Dow right before the announcement. They knew that they were just going to run this right through the roof. And it went from 18,292 to 18,390, 100 points. S&P, same thing. You know, believe me when I tell you, they're very predictable. They are, you know, sometimes you just get some really great trades and you just got to know when to take it. See the DAX, they announced it here and they went. And this was I love the DAX, but you know, when it moves, it can rip. See, look at that. They came right back down, but they didn't come all the way down. So again, we were looking for a $2 move, and that's what we got. I just don't think they're going to come back down. I think they're just going to settle. Crude is just going to hold there. It came back to the 50. Maybe it'll come back down. And this would be a mean reversion trade where it trades away from the mean and then comes right back to it. US yen, you know, they went right back up. But look at this, if we wouldn't have gotten out here, they would have played with us. Then it came right back up. I hate when they do that, and the euro continued to go down. You know, I was calculating that the euro was going to do at least 100 pip, maybe an 80 pip move, and that's what it looks like it's going to do, 80 to 100. Nothing more than that. Pound dollar, you know, continued to come down. It's already done 100 pips. This would be a 130 pip move now on their end. US Swissy just continues to go. Euro Aussie is holding. Why it's holding, I don't know. I'm trying to see what the Australian dollar is doing. This one's weakening. That's why, because this one is weakening. But they're right here, but there's no chance that they're going to move any further. Aussie yen. We were looking at the Aussie yen and considering a short on this, and it was on the 5-minute, if I'm not mistaken. Yes, right on the 5. And it looks like it's going to come down, but we're late. We missed it. It is what it is. We got caught up with gold. So that's pretty much all that I have to show you guys for today. I don't really have much more to share at this point. Look at that pound yen. What a beautiful move. God, I love my software. You will too. So I'm going to put my email here and my contact information so that you guys can send me an email. Those of you that are interested, like I said, we are going to be doing a summer sale, and it is going to come out next week, so look for it. There's my email, ricardo@phoenixtradingstrategies.com. If you have any questions, you want to give me a call later on, feel free to reach out. I'm here in Southern California, so you can imagine right now I am a little tired. If you're from overseas, you can send me a message through Skype. My Skype name is ricardo@pfg. I haven't changed that. I've had that for years. And again, I want to thank you very much for joining us today here at Phoenix Trading Strategies. It was a pleasure guiding you in the maze of non-farm payroll. Have a great weekend. We will see you Monday morning at 9 a.m. Eastern Time. Thanks a lot. Take care now.